Hello, I'm the 3 Money Hits guy. In this video, I will compare the long-term return obtained between renting a house versus buying a house. I will show you which one is the best option for your pocket. The examples I will give in this video are based on average prices and rates observed in my region. But it seems to be comparable in several countries of the world if the cost of living is compared to the strength of the currency. Let's start with the hypothesis that you want to buy a house for $500,000. To finance the acquisition, the bank will ask you for a minimum of 5% down payment. So, the mortgage you are going to take out will be for a loan of $475,000. To be very generous, I will only apply an interest rate of 3% during the 25 years of the loan. You will therefore have a monthly payment of $2,250, and after 25 years, you will have paid in capital and interest almost $675,000. To that, you have to add renovation costs, annual taxes, and insurance, which represent about 2% of the value of your property. After 25 years, if you consider an annual inflation rate of 2%, you will have paid $320,000 for these expenses. So in all, you will have paid almost $1 million for your house. However, if we consider that your house will have gained 3% more in value each year, it will therefore be worth $1,046,000 after 25 years. Now, let's study the rental case. Let's say you find a house or apartment to rent for $1,000 per month and your landlord increases your rent by 2% per year. After 25 years, you will have paid a grand total of $387,000 in your rent. In the case of a rental, your monthly cash outflow will therefore be about $2,000 less when you consider your mortgage payment and the annual expenses of owning a home. If you invest this monthly savings amount for 25 years in an ETF that replicates the S&P 500, you will make about 8% per year return, which is the historical return for a fund made up of these companies. This will bring you after 25 years to an accumulated capital of more than $1,800,000. So, for the same monthly cash outflow for 25 years, you will be richer by $771,000 by having been a tenant, that is to say with a personal value of 73% higher than if you had been an owner. However, if you had generated a return of just 4% on your investments, your value would have been the same if you had been a tenant versus having owned. You can surely do better than that if you listen to all the stock market videos on my channel. Also, to arrive after 25 years to an asset equivalent to that of being a tenant, you would have had to find a house to buy at about half the price. Bottom line, maybe someone might prefer the feeling of being a homeowner, but it definitely comes with an opportunity cost and a lot of maintenance to go with it. If you found value in this video, please hit the like button. Subscribe to the channel if you don't want to miss any video. I'm the 3 Money Hits guy. Thanks and keep on learning.